Ladies and gentlemen, good day and welcome to the Q3 FY21 earnings conference call of Apollo Pipes Limited, hosted by Systematics Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankit Gore from Systematic Institutional Equities. Thank you, and over to you, sir.
Thank you, Steve. Hello, everyone. On behalf of Systematics, I welcome all to the Q3 FY21 earnings call of Apollo Pipes Limited. From the management side, we have Mr. Samir Gupta, who is a Managing Director, and Mr. Ajay Kumar Jain, who is a Chief Financial Officer of the company. Without much ado, I would like to hand over call to Samir ji and the management participants for the opening remarks, after which we can open floor for Q&A. Thank you, and over to you, sir.
Thank you, everyone. This is Samir Gupta. Good afternoon, everyone, and thank you for joining us on our Q3 and 9 months FY21 earnings calls to discuss the operating and financial performance for the quarter. I trust that you and your families are safe. I hope you all had the opportunity to go through our results presentation, which provides details of our operational and financial performance for the third quarter and 9 months ended on 31st December 2020. To begin with, I am happy to share that we have reported an encouraging performance during the quarter, led by strong recovery and robust consumption across markets. Our total sales volume has marked a steady improvement of 7% YOY to 11,445 metric tons per annum, for 9 months in Q3 FY21, mainly driven by a healthy contribution from our CPVC and value-added product segment of fittings. In addition, our latest launch, APOLLOPIPE water storage tanks, had also assisted volume performance during the quarter. On the whole, we are seeing increasing traction in demand across our product categories. On the operation front, all our greenfield and brownfield manufacturing expenses across facilities are progressing as per schedule. The operation of our greenfield facility at Raipur is also marking healthy progress, and we remain on track to commission this facility by March 21. The plant, with a proposed capacity of 7,200 metric tons, will provide a strong impetus to our overall volumes. All our facilities are also now operating at stable utilization levels, and as operations further normalize, it will help us boost overall volumes going forward. I am also happy to share that inquiries and wins for our latest launch, APOLLOPIPE water tank, is seeing a strong build-up in the domestic markets. In order to address this increased demand for the product, we have already doubled our capacity for this product at our Secunderabad plant and one unit at Tumkur plant. We remain confident that this product, along with our other value-added offerings like fittings, solvent cements, bath fittings, adhesives, will enhance our reach and strengthen sales going forward. We are constantly working towards augmenting our presence across existing and new potential geographies. The operation of our Raipur plant in FY2022 will enable us to grow our footprint in the untapped market of Eastern and Central India. Further, the launch of value-added products, enhanced branding activities, and phase-wise capacity expansion across our facilities should further build the momentum going forward. On the whole, we are confident for the future growth potential and opportunities at domestic market over the medium and long term. On that note, I would now like to invite Mr. Ajay Jain to run you through the key financial highlights. Thank you, and thank you for joining this call. Thank you.
Yeah, good afternoon, everyone. I will briefly cover financial performance during the quarter and 9 months ended 31st December 2020. The company delivered healthy operational and financial performance during the quarter, led by an uptick in demand and consumption in the domestic markets. Total income from operations for the quarter stood at 128.1 crores, up by 28% as compared to 100 crores in Q3 FY20. Sales volume for the quarter grew by 7% and stood at 11,445 metric ton per annum as compared to 10,712 MTPA in Q3 FY20. Total income from operations for 9 months FY21 stood at 343.9 crores as against 313.8 crores, higher by 10% YOY. On the profitability front, EBITDA for the quarter grew by 139% at 25.5 crores as against 10.7 crores in Q3 FY20. I would like to highlight here that there were notable price increases in raw material during the period, due to which there has been a one-time inventory gain. This has resulted in sharp increase in EBITDA margins, which stood at 20% in Q3 FY21 as against 11% in Q3 FY20. However, we anticipate EBITDA margins to normalize going forward. EBITDA for 9 months FY21 stood at 47.2 crores, higher by 32% as against rupees 35.8 crores in 9 months FY20. Margins for 9 months FY21 stood at 14% as against 11%, up by 232 bps. Though depreciation cost stood at 11.8 crores in 9 months FY21, in Q3 FY21 it stood at 4.4 crores as compared to 3.4 crores in the same period last year, higher by 32%. PAT for the quarter stood at 16.3 crores, up by 145% when compared to 6.7 crores in Q3 FY20. PAT margins for the quarter also stood at 13% as compared to 6% in Q3 FY20, higher by 609 bps. PAT for 9 months FY21 grew by 25%, stood at 27.8 crores as against rupees 22.3 crores in 9 months FY20. PAT margins during the period stood at 8% as compared to 7% in 9 months FY20, higher by 101 bps. From this quarter onwards, we have discontinued sharing the segment-wise revenue details because of the sensitivity of the data.
I hope
so. And hope we can provide the details in due course. On the balance sheet front, our net cash position stood healthy at 29 crores. Our capex outlook remains steady, and we expect to fund the same through internal accruals. On the working capital front, additional raw material requirements at newly commissioned capacities may moderately impact inventory levels in the near term. However, our endeavor remains on maintaining our overall working capital cycle at stable levels. With this, I would now request the moderator to open the forum for any questions or suggestions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bhairav from Kotak Mutual Fund. Please go ahead.
Yeah, good afternoon, team, and congrats for a good set of performance.
Yes, thank you.
Sir, my first question is that we've seen a significant increase in PVC prices. So just wanted to have your thoughts in terms of what is the impact of this on the volumes per se.
Hi, Param. Yeah, the prices are almost at the peak right now, and the industry is witnessing the same. But as you know that there is no much alternates to this product. So the volume may be deferred for a short time, but it cannot be avoided. So we don't foresee any much, you can say, volume impact on this product going forward, despite the prices are high. But the market will stabilize and the volumes will be, you can say, again back to normal once the, you can say, prices are, you can say, they are in the, you can stabilize in the mind of consumer.
Okay, understood. Secondly, sir, any views in terms of where can these prices sort of stabilize? You mentioned that they are at all-time high levels. So essentially, what are your thoughts in terms of where these prices could stabilize in the medium term?
Yeah. Right now, because in India, if you see that almost 50 or 60% of the demand for PVC product is catered through the imports, and because of logistic issues of COVID going across the world, so the material availability is real problem. Once this thing stabilizes, then we can see that the prices will be stabilized, but we don't see too much, you can say, drastic change in the near future for this product. Minor changes may be there, but we don't see right now too much drastic change. So you can say that the prices will be, you can say, stabilized, and going forward around 6 months or 9 months down the line, it may go back to the normal stage.
So in these uncertain times, how are we planning our inventory? Because are we sort of resorting to reducing our inventory levels, given that we expect a correction in the price, or how are we doing it?
Of course, with the prices to be all-time high, we are very much cautious regarding the inventory level of our plants, and we are trying to work on the minimum level that will benefit us on the both sides. First, the working capital cycle will be low, and other, the inventory loss will not be there too much. And of course, we are seeing the strategies for purchase, because we are mainly dependent on imports for our purchases. So we are, you can say, planning in such a way that the minimum impact should be there on our, you can say, profit lines.
And lastly, in terms of our water tank business, is it possible to share our manufacturing capacity, and have we tied up with any outsourcing partners?
No, right. Yeah, right now we have not tied up with any outsourcing partner. During the third quarter, only one machine was available, and three more machines were under installations, in which 2 machines have been installed in the last month of, you can say, late December, somewhere around last week of December. So from this quarter onwards, we will be seeing the you can say numbers for next 2 machines, and the 4th machine will be coming in Raipur. So that number will be coming from the quarter 1 next year. So, and right now we don't have any tie-up with any other service provider.
Okay, gentlemen. Thank you very much, and all the very best.
Thank you.
Thank you. The next question is from the line of Madhav Marda from Fidelity Investment. Please go ahead.
Yeah, hi sir. Good afternoon. Thank you so much for your time. My first question was that our volume growth for this quarter has been 7%. Broadly at the industry level, what could it be for PVC pipes?
We are not very much sure, because the numbers from other companies are yet to come. But there has been a pressure on the volumes because of the all-time high prices. The dealers and the retail networks, they are trying to reduce the inventory and working on day-to-day basis, on need-to-need basis. So because of that thing, a little bit of pressure is there on that, you can say, volumes. But going forward, we don't see too much, you can say, backlog on this account, because as the inventory level will go down, then they have to purchase the needs, daily needs, and the, you can say, the projected needs of their demand from us. So going forward, there will not be any much impact on the volumes. And as concerned about the, if we talk about the rest of industry, it should be at par with our volumes. I think so. Yeah, I cannot hear you. Please repeat again.
Mr. Marda? Mr. Marda, we are unable to hear you.
Yeah, is it better now?
Yes, sir. We can hear you now.
Yeah. My question, sir, was that given that PVC price is a bit high, and we hear of smaller PVC players, struggling either to get raw material or to fund working capital. So because of that, can there be more consolidation in this space in 2021?
There can be, because for the smaller players, it has been a tough year because of the all-time high premium also on this product, and the material was not available, and premium was too high, so they were not able to sell their products. So there may be some consolidations in these numbers, but right now we don't have any such data with us that how many such players have been stopped their, you can say, this production activities, and what is the exact impact on them. So we cannot comment right now on them.
Okay. And sir, in our reported results, is it possible to give us a broad sense as to how much did the inventory gain contribute towards the margin expansion versus the product mix improvement that we have achieved?
Yeah. Of course, there is an inventory gain in this quarter, and but it is very difficult for us to determine because of the regular movement of material, and we have been regular selling our products, so it is not very easy for us to calculate. But we are actually very much focused to have a sustainable, you can say, EBITDA margin of 12 to 13% of our product, and we are also working on the value-added products that is also supporting us a bit in our this EBITDA levels improvement. So it should be a good, you can say, numbers, and some part of this profit margin is from this inventory gain, but it is not very easy for us to calculate the same.
Okay, sir. I'll come back to you.
Thank you.
Thank you. The next question is from the line of Agastya Dave from CEO Capital. Please go ahead.
Thank you, Samir bhai, for the opportunity, and congratulations on good numbers. Sir, एक question मुझे ये था कि if I look at the quarter-on-quarter numbers compared to Q2, our volumes have dipped. So how should I look at it? Because I am not very sure how seasonality plays out, and this year Q2 was impacted because of Corona. So how do I look at that?
Yeah.
And you mentioned that there is volume pressure, thoda sa. Can you quantify that? How much? I mean, is there an estimate to that?
Yeah, Agastya, thank you. First of all, there has been a volume contraction if you see quarter on quarter, but because of that, we have started after COVID in quarter one in somewhere until late of May, and there was lot of demand backup was there in quarter two. Ordinarily, quarter two is, you can say, is back from the demand side, but because of the backlog of the quarter one, we saw a good, you can say, demand from that quarter two. But because of that good demand, the demand shifted a bit, you can say, from June to July and August. So because of that, we saw a good, you can say, good jump in demand in quarter two. But if we talk about quarter three, we were mainly focused on building products and, you can say, value-added products. And because of, you can say, all-time high prices, the impact was there on some of the agri products. But being a building product, we were much more focused on building products and this CPVC and other bath fittings and adhesives. So we were getting good response from there. So that helped us in improving our profit margin, as well as that the top line was also very much, you can say, has gained because of that thing. And there was some impact on this agri products, which we see that it should be back on track by in this quarter, because the inventory levels are again going down with the dealers and the retailer network.
Samir, I know it's a very tough thing to estimate, but how would you gauge the demand as of now, the strength of the demand? Because I understand prices high, people are maybe postponing a bit.
Yeah,
but
of course,
are you satisfied with what you're seeing? Is it encouraging, or do you think we will see some sort of a slowdown?
No, sir. As Apollo we are in a growing stage, and we are increasing our, you can say, product SKUs. Along with that, we are also increasing our geographical markets. So we don't foresee any much challenge on our side. Maybe industry may see something, but being a very small size in numbers, you can say that the industry, of the total percentage of the industry, we are almost at 1.5 to 2% of the total industry. So we don't see any much challenge to us. So there may be a slowdown across the industry, but that not to that level because of the high prices. The inventory level with the dealers and retailers are also at very low. So the demand should be continuing in the coming quarter.
And so the PVC price spike, could you quantify how much the prices went up by last quarter compared to Q2?
I don't have the exact figure for quarter, at what prices quarter two ended, but it should be somewhere around 30 to 40% price hike should be there on PVC.
Quarter on quarter. And sir, has it stabilized, or is it still going up? Let's say last 15 days.
No, it's now right now stabilized, and a bit of correction is there of around, you can say, 2 to 3%, but that is not again impacting because of the availability of the material. It is not available in ample because of the COVID situation. The transports and the vessels are not available. So that challenge is still there.
So, sir, how you mentioned that you will be reducing inventories, better inventory management. So, can you like throw some light on how are you managing it? Because if you overcorrect, then probably you will have material shortages. So how are you?
Yeah, I understand that.
Managing that?
Yeah, I understand that thing. Because of that thing, we are trying to have some local sources for our procurement for at least next 5 to 6 months, so that the inventory problem should not be there at our plant. Along with that, again, we are, you can say, optimizing the stock levels. Because of that thing, we can also manage some inventories over there.
Right. One last thing, sir. Last call, you mentioned that your target for existing assets, with the existing asset base, you were targeting 3 times asset turnover and a 12% EBIT. Now, obviously, the prices have gone up, so the asset turnover obviously will be impacted. So that I understand. But on the EBIT side, do you think that long-term 12% is sustainable, or slightly more than that? Are you changing that view?
So we are focusing that thing only because we are also trying to increase our market share along with that. Because we have in this quarter we have seen a good demand from the CPVC and the fitting segment, and there is a good growth on both the sectors. So going forward, the margin should be minimum 12 to 13% in the coming quarters.
EBIT level.
EBIT. I'm talking about EBITDA level.
It could be around 10 to 11%.
Okay, perfect. So thank you very much, sir, and all the best for the next quarter.
Thank you.
Thank you. The next question is from the line of Puneet Mittal from Global Core Capital Limited. Please go ahead.
Hello, thank you for the opportunity. Couple of questions. One is, I think you mentioned in Q1 that you're targeting about 60 to 70 crore of revenue from your water tank business in FY21. Does that target stay or does it change?
No, right now, I don't remember, but in FY21, 60 to 70 crores from tank business, I don't think it is right now possible because the capacities is not that much. We have only one machine at Secunderabad in which we will be achieving somewhere around 15 to 20 crores on annual basis of this tank business. But going forward in the next year, we can target this amount. Because of that, capacities will be available from this quarter onwards, Q4 onwards. So after that, we will be able to achieve that number.
So let's say from FY22, annually from each machine, how much do you target? What revenue raise do you target from each machine?
Roughly around each machine will be around 1.5 CR, roughly around 15 to 20 crores per machine will be there. And if you multiply it by 4, it should be around 60 to 70 crores.
Okay. The second question is, would you be able to give some color on your geographical distribution and revenue now? I know you were very strong in north and some western part, and you're trying to expand into east and south. So what is the distribution of revenue now, and how do you see that panning out going forward?
Going forward, we have installed this capacity at Tumkur plant of PVC and this tanks and fittings, and we are getting good response over there. So going forward, we think that the south will also be a good base for Apollo in the coming days. Along with that, we are also getting good response from other markets, allied markets like Western India, and you can say that from Ahmedabad plant, we are feeding that northern of Maharashtra and southern of Rajasthan, along with some parts of MP. And going forward from the Raipur plant, we will be feeding central and the eastern, you can say India mainly. So right now, much more focus is on the southern plant because Tumkur is a big plant, and we see that in the next year we will be seeing good market presence in those markets. Along with that, in the next 1 or 2 years, we will also be seeing some good footprints in this eastern India.
So currently, how much percentage of revenue is coming from north versus other regions?
Tumkur is roughly around right now contributing around 10 to 15%, and along with that, mainly this plant, Dadri plant is mainly focusing towards the northern market, and along with that, from Dadri plant, we are also supplying to all the parts like in Maharashtra or in Gujarat or in Tumkur, also the fittings and the other range of the products, because all the products are not being manufactured all across the plants. So the bit of stock transfer is also there. So put together, you can say that the South should be around, you can say 10 to 15% minimum, and going forward it should be around 20 to 30% in the next year.
Great, great. And the last question from me is that you mentioned that due to the extensive distribution network, your delivery time is reduced to 48 hours from 10 to 12 days. Mm-hmm. How does that compare to the competitors in terms of the delivery time?
I'm not exactly aware how many days they are taking to deliver the goods, but 48 hours delivering the goods is good time in the industry, and if we are able to maintain this 48 hours delivery, we will be getting good response from the market.
Do you think, given the current situation where you just mentioned that dealers are trying to reduce the inventory, this 48-hour delivery time gives you some advantage because you're able to replenish the stock very quickly with the dealers?
Yeah, of course it will.
Okay, that's it from me. Thank you so much.
Thank you.
Thank you. The next question is from the line of KVRS Babu from Vishar Portfolio Investment Private Limited. Please go ahead.
Fittings is almost 20% of our revenue last quarter, and at what level you want to see the fittings? Is the same as our main product, or at what level you want to see fittings in next 2 to 3 years?
Fitting is still our main product, and the level right now it is around 20 to 25% only, and it will be around 25 to 30% at peak level also. And at this level also, fitting is, you can say, will be contributing will be a main contributor to the top and the bottom line. And going forward, if we increase the sales volume of fittings, then it will also have the impact of, you can say, on pipes also. So not if we increase the sales of fittings, it will be added. It will also be adding the sales of pipes. So percentage will be around this thing only going forward.
And what is the margin for fittings?
It depends upon it depends on, because there are lots of SKUs on the fittings, and it is you can say it is from product to product, like agri fitting or UPVC fitting or CPVC fittings, like we are diversifying in all the 3 products. So they have got a little bit of different margins, sure, but it should be somewhere around 20 to 25% of EBITDA margin.
And is there any market share gain from unorganized sector because of COVID or with raw material price increases? They are unable to produce. Is there any
of course, there is certainly you can say market gain from the unorganized sector because of the all-time high prices, and the premium was too much, and the unorganized players were not able to feed the market because of the sourcing from open market was very high. So definitely the organized players have gained in this account.
And what is the industry growth you are expecting? Presently government is giving a lot of things to this mainly agri people, farmers or agri people, and our main product is UPVC. So we are expecting any big change in industry growth, or it will be same as the previous years?
No, actually, if we see the industry growth, it is right now stable, and a bit of impact of COVID is there because of the unorganized sector not able to perform well because of the high prices. And along with that, the government is also supporting us. So for this product by agriculture or the housing plans that is going on in India. So we see that there should be a good growth in this product of UPVC or CPVC, because all these products are going in this sector. So there should be a good growth, you can say, of around, you can say, around 7 to 10% in the, you can say, industry.
Thank you.
Thank you. The next question is from the line of Abhinav Sood from ZM Investment. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. Sir, I wanted to know how are we seeing the PVC price momentum going forward for the next 1 to 2 quarters only, not beyond that, because beyond that you obviously mentioned that the prices will normalize. For next 1 to 2 quarters, how do we see the prices?
There should be a pressure of, you can say, on prices of PVC because it is all-time high. But along with that, in the next 1 to 2 quarters, the main PVC season period is also there. So a little bit of confusion is there in the market whether to stock the material or to vanish the stock and just run around the plant with very low or zero inventory. So a bit of confusion is there. That call we have to take, and industry is also, you can say, cautious regarding that thing. So in the next 1 or 2 quarters, we don't see too much, you can say, drop in the prices. And along with that, because of the robust demand in the Q1 of FY next year, so because of that, we have also to, you can say, keep the inventories with us. So depending on that, seeing that, the prices should not be impacted too much in the, you can say, 1 or 2 quarters. But going forward after June or July, there should be an impact. But international market behavior is also, you can say, an important thing to watch in this aspect, because the material, if the material is not available and the vessels are not available, so that again will be a challenge for us to procure the material, and the prices will remain on the same level.
Okay, that's a clear explanation. Thank you, sir. And sir, one more question. And EBITDA levels you mentioned, what are targeted EBITDA normal levels which you are targeting? Is it 12 to 13%?
Yeah, we are targeting this EBITDA level only right now.
And we are mainly dependent upon imports, whereas some established competitors are sourcing it from Reliance and other local domestic companies. So why aren't we not sourcing from Reliance and other domestic sources?
No, we are also sourcing from Reliance, because earlier we were mainly depending on imports, but from last quarter we have shifted some of the purchases from imports to domestic market, and almost you can say around 10 to 20%, around 20% of our right now purchases is from the domestic market, which we are keen to increase. Like I told in my earlier person also, that we are increasing this percentage to roughly around 30 to 40% from the domestic market.
Okay, and sir, import prices, are they higher or lower than domestic prices?
Right now they are, you can say, roughly around equal to the domestic prices. There is no much gap right now from the import prices and the domestic prices.
Okay, sir. And so last question from my side, what is the capacity utilization levels right now?
Right now, capacity utilization level is roughly around 50 to 55% across all across units.
50 to 55%.
Yes, sir.
And what are the peak levels we can achieve?
It is roughly around 70%. You can say that 65 to 70% is the peak level that we can achieve of the total installed.
So on a 1 lakh MTPA capacity, we can achieve around 700 to 800 crores of revenue.
Sir, of course.
Oh, okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Ankit Shah from Stallion Asset. Please go ahead.
Yeah, I just wanted to understand what will be the differentiated margins for value-added products and PVC pipes, and what would be your long-term revenue share from these two products going ahead?
Right now, we are much more focused on value-added products like fittings, and we are getting a margin of something around 20 to 25% from PVC products. And all the pipes, if you talk about, this is roughly around 5 to 10% of the, you can say, EBITDA margin. And going forward, we would like to maintain the same level, you can say, because we are much more focused on the, you can say, market increasing rather than increasing the, you can say, bottom line of, because of this PVC pipes, it may hit us if we increase the, you can say, bottom line in PVC.
So what will the long-term revenue share from these two product lines, value add and PVC? What would be the long-term guidance for that?
Roughly around 50 to 60% will be coming from pipes, and you can say around 5 to 10% will be coming from, you can say, other products, and these fittings will be somewhere around 25% or to 30%.
Okay. And I just wanted to understand how many distributors of Apollo pipes and APL Apollo would be same. Like, what percentage of distributors would be also be there with APL Apollo as well as with Apollo pipes, and what percent of distributors are yet to be covered by Apollo pipes, so already catering to APL Apollo?
Earlier, I also told in my earlier calls also that right now we are not much focused upon that to target the Apollo pipe distributors. Rather, we are targeting the dealers and the retail networks, so that the retail and the dealer networks should be the same, or we may have the, you can say, benefit from there. Some dealers or distributors of Apollo tubes, they are big and they are quite substantial, but they are not focused on plastics. So if we go through them, then it will be not good for our business. So we are much focused towards the market side, where we need to have a good brand presence, and the you can say the branding of Apollo tubes should complement us in this product. But if we go through that same distribution network, then that would hamper us. So we are not much, we can say, very much focused toward same distributorship. But the markets we are targeting to be same, and we can enjoy the benefit of APL Apollo branding.
But would you have distributors who are already part of APL Apollo currently?
Of course, there are some distributors who are who are common in both the companies, but we don't have such numbers with us.
Okay. And just a bookkeeping question, what will be the inventory gain this quarter, if you can quantify the number?
It is not easy to quantify. I told in my earlier slide, it is not easy to quantify, but it is good because we are selling on a regular basis and the material movement is also there on the regular basis. So it is good, and we are trying to maintain the EBITDA level of 12 to 13%. We are working out as per that only. So you can see that because of that thing, you can go.
Okay. And when do you expect the capacity to be completely utilized? I think so it's going to be around 125,000 MTPA by March 21.
21, yeah.
And currently we are at a run rate of 45 to 46,000 MTPA. So in how many years do we expect to be completely utilized?
We don't know. Actually, it's a seasonal product, and in the season time, we are always running short of the capacities. So running 100% capacity of 125 right now it's not possible, because if you see that going forward, we will definitely increasing the capacity of all the ports again. If once we reach this 125 and reach a turnover of 1,000 crores, then going forward we will be increasing the capacity of all the ports again. So going forward, the capacity utilization will be good, and we are targeting good. You can say operational efficiency at our works also. So it should be, you can say, roughly around 60 to 70% at the peak level. I think so.
Okay, thank you, sir.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity, sir. Congratulations for the great numbers. My first question is, in terms of agri versus non-agri, could you give some color on that? Is there any agri mix for us? And if yes, what is that mix?
No, I could not understand. What do you want?
The agriculture, agri pipes fittings for us is what is their revenue contribution?
Okay, the revenue, the breakup is almost the same. We are working almost on the same, you can say. A little bit of decline in the current quarter is there on the agriculture pipes. Because of that, you can say high prices and some impact because of this extra inventory with the dealers and distributors. But you can say the percentage is almost same with the last quarter.
Could you please help with the number, sir? Sorry, I don't have the number in front of me. Would you have that number? Agri, what is the mix, revenue mix or volume mix?
It will be difficult for us to disclose this thing.
Okay. But you said the agri, the channel inventory was higher in agri, and that's why less of primary sales in the quarter. Is that what you said, sir?
Yeah, it is also impacting along with that high prices. Because of high prices, a bit of demand is being deferred. So that is also impacting. Both the things are, you can say, hampering the demand.
Understood. And in terms of the CPVC, possible for you to share how large is CPVC for us in terms of the mix?
Yeah, CPVC is again growing. It's on the growing side, and you can say that if you see that the growth of our company in quarter-on-quarter basis is roughly around 30%. Sorry, year-on-year basis is roughly around 28%. So you can say that the major contribution is there from fittings and CPVC.
Understood. And you mentioned that 7% is the volume growth for us, and that would be industry should be similar volume growth at the aggregate level. So how do we tally this unorganized to organized shift if the industry growth is 7% only for the quarter?
I don't know actually, because if we cannot right now, because it is just the quarter has ended and we don't have the figures from other competitors and other, you can say, players. So we don't have what exactly the industry has performed. Going forward, we will have the figures from other players. Then only we will be able to calculate that how exactly the industry has performed. But right now, as per our assumptions, the industry should be in this line only.
Understood. And just last question, if I may, in terms of the competitive intensity from the large players, has that gone up or gone down or remains similar?
It is right now for Apollo. It is almost similar as you can say as the last quarter was. the competition was almost similar.
Right. And given the agri season is coming up, have you started seeing more inquiries, or things are as they were in the last quarter in terms of agri, given the high PVC prices?
No, there should be inquiries because last week, we can say first or second week, was more festivals in the western and southern India because of Pongal and other festivals there, and north because it was a bit impacted because of extreme cold. So going forward, we are very much optimistic regarding the demand and you can say sales for agri pipes.
Got it. This is very helpful, sir. Thank you so much.
Achal, on that agri building material mix, please note that we have been giving a revenue-wise breakup till first half of FY21. So you can look at our last quarter presentation. You will have some idea for the split between agri and building material.
Sure, I'll do that. That's helpful. Thank you.
Thank you. The next question is from the line of Karan Batelia from Asian Market Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Contribution from metros was very well, when we talk of first half of FY21. So for the quarter, have we seen good recovery from the metro side, or are we still back on a YOY basis?
No, if we see our recovery from metro side, there has been you can say good demand from the metros along with the rural areas also. So put together, I think the demand is recovering. If you see that, and along with that, we are also focusing on you can increase in our SKUs of our product portfolio. That is also helping us a lot in increasing our sales.
Right. And sir, we keep hearing that the plastic piping segment is seeing a lot of market consolidation. So have we seen a good dealer addition, in last 6 to 9 months?
So we can, of course, because of that thing, we are definitely seeing, you can say, addition of good number of addition of dealer and you can say distributor networks. But right now we are not able to comment upon this because we don't know how you can say regular they will be or how long they will be running. Once they are regularized, then we will definitely add there in our number.
Got it. And so last question, if I could proceed, sir, if you can give us plant-wise utilization levels, what at Dadri, at Ahmedabad, and what levels at Tumkur?
It is Tumkur. We are seeing good utilizations, but it is amongst all the plants. It is roughly running between 50 to 60% from all the plants.
Okay. Thank you, sir. That's it from my end.
Thank you. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. So, what kind of fitting growth we have seen in this quarter?
It is roughly around, you can say, 30 to 40%.
Okay. And sir, when you say that CPVC, HDPE, and value-added segment have grown, so is it a pent-up demand still in the system, or are we also seeing a fresh buying?
No, it was not phantom demand. It was regular buying from all the you can say dealers, and we are working across in increasing the distributor network along with the geographies also. So altogether, it has helped us in increasing our sales for these products.
Okay, and sir, how much dealer distribution network we have added in this quarter, or maybe 9 months FY21?
Like I told in the last to Karan also that we have been we have been getting good inquiries and increase our you can sales to new dealer and distributors, but we don't know how long they will sustain. So going forward, we are right now we are working on yearly basis that how many exactly or sustained numbers we have added, so that the figures don't go up and down every quarter. So we will be disclosing this number working on this number every year, so that there should be some, you can say, base of those numbers for the investors and others, you can say.
Okay, and sir, lastly, when you said that, maybe by March 21, we are looking for a 125,000 ton kind of a capacity. So where we are exactly adding this capacity? Which facility, sir?
We are
for which product?
Yeah, we are adding capacities across, across all the locations. We are and mainly we are focusing on water storage tank and this fittings. Along with this, the pipes is also being added. So all the products and all the segments we are adding the capacities.
But this will be purely for Dadri, or we are looking at even Bangalore and Gujarat also, sir?
Sir, right now we are not putting too much focus on Gujarat. Other than Gujarat, we are investing on Dadri and Bangalore and Secunderabad, along with new plant coming up in Raipur.
Okay. Thank you so much, sir. That's it from my side.
Thank you. The next question is from the line of Ashim Berde from DAM Capital. Please go ahead.
Yeah, hi. So just wanted your view on agri pipe growth in an environment of high PVC prices. So you are optimistic, you mentioned, but how does a farmer react to high PVC prices? Does it lead to continued deferment, which in this case could mean the entire season that could be lost and demand getting pushed to the next season, post-October?
The demand, if you talk about demand from the farmer side, they are a little bit cautious, and the finance is also a problem for them. But if you see that the options are not too much available with them for this product, if they have to use this PVC pipes, then they have to go for this product only. They cannot go for steel, or you can say any other polymer or any other cement pipes for water transportation or bore wells. So there is only one material available for them for this bore well, or you can say for water transportation level. So they can only defer the plant, and that is also they can do to some level. They cannot defer it forever. So I don't see that there will be too much delayed in the demand from the farmer side. They have to go for this product, and you can say that because of this COVID and other things, that prices have gone up really high. But right now it has been a little bit stabilized. The premium has been stabilized by almost 10% in the last 1 month. So a little bit of relaxation is also there in their mind, and I don't think that there should be any good there should be any hamper on the demand, and there should be good demand in the coming quarters from them.
So you don't anticipate too much of a demand destruction, if I can call it that, for this particular season? There should be some decent agri demand from...
Yeah, because the inventory levels are also very down. So there is no much scope left at their end to work on the demand side, because they have to take the material if the demand is there from the dealers or retailers. And the farmers, if they have to do farming, they have to go for pipes only.
Okay, sure, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Amit Soni from PwC. Please go ahead.
Hello, sir. Yeah. Sir, I wanted to ask about the different cost optimization measures which you have put in place. So the presentation said that improved margin is because of one, growth of value-added products, and second because of raw material, and third because of different cost optimization measures.
Yeah, on the optimization level, we are continuously working on the capacity utilizations of the machines and increasing the productivity of the machines along with low scrap rate. So because of that thing, we have been getting good results, and going forward we will be seeing some more good results on this front from our plants.
Okay, thank you, sir.
Thank you.
And products which are planned, sir?
Pardon?
Any new products which are planned?
Right now we are only increasing the SKUs of our already running segments. We are not adding up new segment, but many new SKUs are being added on continuous basis for all the segments.
Okay, thank you, sir.
Thank you. The next question is from the line of Ajay Sharma from Maybank. Please go ahead.
Yeah, I just want to check your return on equity numbers are still on the lower side. So what is the company's strategy or plan to really try and boost the return numbers over the next few years?
So Ajay, if you see that the first parameter what we look at is return on capital employed, which is in if we utilize all our capacity over the next 2 years, we should be touching 25-30%. As far as the ROE is concerned, it is slightly low because of our inflated net worth, because the company had promoters had put in funds, they had infused new equity 1.5 years ago. So as we touch 25-30% ROC, we should be touching ROE of 20%, which we believe is good. And given that all the future capex will be funded from internal cash flow, there won't be any requirement of new equity infusion. You will see that ROE also improving to 20-25% levels in the longer run. But we are quite satisfied with the kind of ROC which the business is generating, which is upward of 20-25%.
And what will be your annual capex basically over next few years?
So this year we are targeting around 50-60 crores, out of which 70% has already been spent for FY21. FY22-23 we are expecting like we should be spending 20-25% of our EBITDA towards the new capacity addition, towards new value-added products, high-margin products. So that's what we have capped our capex spends at, 20-25% of annual EBITDA.
Okay, great. Thank you.
Thank you. The next question is a follow-up from the line of Madhav Marda from Fidelity Investment. Please go ahead.
My question has been answered. Thank you.
Thank you. The next question is a follow-up from the line of Abhinav Sood from ZM Investment. Please go ahead.
Yes, sir. Just needed clarity on a point that by March 21, will we be achieving 1 lakh metric ton per annum or 1,25,000 metric ton per annum?
With the Raipur plant, it will be 1.25 lakh tons.
Okay, with Raipur plant, it will be 1.25. Okay, thank you, sir. That's it.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Ajay Sharma from Maybank. Please go ahead.
Yeah, I just want to check on your guidance. I think somewhere in the presentation you mentioned that you're targeting 25% CAGR and volumes over the next 3 years. So, and what gives you that confidence considering your volume growth has been below that both in FY20 as well as FY21?
So Ajay, if you see that our current infrastructure, which will be ready by March 21, 125,000 ton, we believe that this has potential to generate around 1,000 crore EBIT, 1,000 crore revenue, okay, which shall come over the next 24 months, and it will have 12-13% EBITDA margin. That's our business model we are working towards, and it will be mix of agricultural and building material segments, which will be boosted by our water tank business and solvent business, which both are growing equally well. So all in all, we are confident that we could touch 1,000 crore top line over the next 2 years.
Okay, thank you.
Thank you. The next question is from the line of Yash from ICICI Bank. Please go ahead.
Hello. Good afternoon. Congratulations on a great set of numbers. Most of my questions have been answered. Just wanted to check on our ESOP policy. I see that you guys have given ESOPs for the first time to your employees this time, and the ESOP trust had purchased shares from the secondary market, and that is the model you're following of giving ESOPs. Just wanted your take on the ESOP policy going forward, and how do you see the employee count, and what will be your basically HR policy of the company going forward?
Yeah, yes. We have been growing and trying to increase the, you can say, capacity, sales, and all the, you can say, across all the, business in our group. So going forward, we need to have a good set of people with our company who can trust on the company and work towards the growth of the company. For seeing that, we have introduced this policy of ESOP, and by adding this, we will be able to, you can say, join good people with our company, and going forward, it will help us in the growth level, because it will also help the personal growth of those employees who are working for the company, and they will also see some benefits on their part because of the ESOP policy. And going forward, there will be some more ESOP policies coming on in the coming years, because because we are getting a good response from all the employees and they are also very much keen towards the growth of the company. So it should be, you can say, a good initiative from the company side to have this policy in our company, and it should give us good result in the coming days.
Sure, sir. Thank you so much. All the best.
Thank you. As there are no further questions, I now hand the conference over to Mr. Ankit Gore from Systematics Institutional Equities for closing comments.
Thank you, Samirji and team at Apollo Pipes Limited. Any closing remarks, Samirji, before we close the call? Thank you.
Yeah. I thank you to all the investors and market research team, and hope we have been able to answer all your questions satisfactorily. Should you need any further clarification or you would like to know more about the company, please feel free to contact our team. Thank you once again and for taking time to join us on this call.
Thank you. Ladies and gentlemen, on behalf of Systematics Institutional Equities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.